All right, I 100% agree with you. I haven't seen all this yet. Hold on. Based on your position, it indicates it's an upward trend, but factoring historical highs and lows, doesn't look like it's likely to continue upward. It seems like it's going to start dipping out again. This is unreadable. You're right. That is completely 100% unreadable, which is completely and totally fine. There's a little arrow down here that you can double click to reset the chart. You also need to get rid of, it looks like you have the histogram bars on there. You need to get rid of that too. This little, hopefully you can see my thingy, but if not, then I'm going to get the annotate tool out here. You can circle that, get that, drop down that. There's some places in there you can get rid of the X. That'll get rid of these histogram bars here. Also, if you hover, I know you can shrink up things by using this as a scroll. You can all do the same thing here, but every now and then when you touch it, there will also be something about right here, which will let you reset the chart to the actual bars that are actually on the screen that'll make it, readable. So yeah, that is 100% unreadable. Gotcha. Cool. Clear all drawings. The other thing, so let's go here. We're looking at Nvidia, and this is basically what it looks like here. So looking at it, fix it, but nothing about tools in the app are intuitive. Yeah, see, that's where you gotta play with it. You gotta play with it more than you do. Um, the only tools that you actually need, so yeah, get rid of the histogram bar. The only tools that you actually need are really this rectangle tool and probably, yeah, I would stay away from path actually. Do the arrow, just do a straight arrow. That way you can say where everything's going to go. After that, and even then, once you have that, you don't even need these long position tools or anything like that because you can use the arrow to just annotate and say, okay, so for instance, if I want price to come back here, then my next thing that I would like is I would try to take an entry somewhere around there with my stop loss down here and then my take profit up here. And then when you actually annotate it to me and you're like, hey, this is, I'm actually basically looking at it, I could see. It's like, okay, you're waiting for price to come down. Here's where a level would be, it's like if I'm wrong. Okay, let's talk about that for a second. Um, so yes, Nvidia's nice, made a nice higher high. And we talked about it earlier when I said, hey, this would have been a beautiful area right there. A couple different reasons, and it's just a lot of it's like it just makes sense when you start lining up certain things together. And you might go, well, why are you going to line these things up? It doesn't really matter. The whole idea is or the whole concept is just to control or mitigate your risk and to get into positions where if you're going to be right, you're going to make more than when you're wrong. And so like for this area here, once this all happened and everything started to line up for whatever it was, if you would have gotten to a position here expecting price to break this area and go higher, however high that would be, well, this would be your entry. If it broke down below this area, you'd want to be out. So anything down here, if you got to close back here, well, obviously that's no longer a valid trade, and you'd go ahead and get out. So like if you look at this as your risk, then each one of these, every time it moves up, you end up getting. So let's say if we just went straight for a higher high, which is much less than this, you'd be risking 1 unit of risk here. Let's say it's $10, $5, $3, 30 cents, whatever it is. But your potential for gain is 3 units of risk. So $1 here, that's $3 gained. $10 here, that's $30 gained. And so that's generally what we go for. We try to go for at least a 1-to-1 because that means with a 50% win rate, we'll still be break even. But anything above and beyond that, then it's just butter, helps us offset some of the losses that we might have along the way. So the beauty of this is if price were for some reason to not respect this area and you got a closure below it, even if it was halfway, well, you wouldn't hold it hoping, oh yeah, maybe it's going to, no, the plan is done. It did not respect the area you thought it was going to respect. It didn't turn. It doesn't matter if it does later on. The point is that trading opportunity is done as far as that. If it lines up again later on, that's a different story. But as it sits, it would be done. You'd go ahead and get exit. You probably exit more than little less than you definitely exit less than half or your full risk. So, and this is where it ends up playing out. Even with a 50% win rate, because of the way that we manage the trades, you can still be really profitable. And so, yes, Nvidia to me, looks like it is going to start coming back down. Once it does that, then the areas of interest, and the only reason they're areas of interest is because it gives me a clear structure for risk. I'm going on the two different principles that resistance, when it's broken, turns into support. And you can see it over and over again in the charts as you go through it. So, and this is where like exposure is key. So support, support. This was resistance at one point, finally broke through, became support, came back down again, was support. Resistance, when broken through, tends to become support. Does it stay that way often? No, obviously, because this was support here that became, then was broken through. This was resistance once, maybe twice, but then was broken through. It's okay because once again, the odds that we're going with is if you were to try to take a trade here, if it broke below this area, that's where you're like, I'm wrong. But where are we targeting? Well, at this point in time, we'd be targeting some sort of equal high to here or higher high, like we talked about earlier. And so when you have that, if you look at what you're risking here for how many gains you're getting, if it works out in your favor, then even to a equal high, you're having one risk for almost four gain. And so you don't have to be right often. You just have to be able to control risk. And so this is where things like what makes sense on the chart visually. If it makes sense visually, then we have something that we can use to control risk. If it doesn't make sense, then we really shouldn't be in that trade. At least not the way that I trade. That's not the way I trade. If it doesn't make sense on the chart, I can't get into a trade. And if you get into a trade that you didn't have some sort of structure to formulate around, then what you're going to end up getting into is something that is, just causes you stress, causes you worry, things of that nature, and you're not going to be able to formulate a plan without emotion involved. And so, trying to be as emotionless as possible. And so this is where it's almost like cut and dry, um, uh, almost mechanical, but it can't be mechanical. There is going to be some sort of intuition here and there, but that comes with time, it being exposed to the market. So yes, I'm expecting price to come down. And this is where I said the 505 area would be a good area to start looking to see if price is going to respect this area and hold this area. If it does, and what does that look like? Well, I mean, in my head, it would look like a pause, 4 or 5 different 4-hour candles that pretty much stay in this area, and then gives me a level underneath here that I can work with. If price ends up coming down a little bit deeper into this area here, then, I might need to adjust my level for where I'm like expecting price to stay within. But then, and then go from there. So that's pretty much it. So like, that's all I'd be waiting for. The only other way I'd start looking at this again is if price started to do something else. It came down here, started creating this lovely level here. And then I saw a strong candle that started to break to the upside. Well, that now also gives me a level that I can work with. I can forego this level because that's no longer important. But basically, my trade would be much like that. I'd get in here. My stop loss would be here. I'm expecting an equal high, if not a higher high, because this is an uptrend. And so when you look at the range here to here, that's a little bit more than 1-to-1, which is perfect. And then if you go even higher, then, we're going for like a 1-to-2, 1-to-2.5. And so this is just the name of the game. It's all about getting into trades that make sense, that you can rationalize, and then letting certain things play out. And if they play out, then, and you end up taking a whole lot more trades that go in your favor, even just a little bit is enough. Especially when you're managing the other trades, even better. So that's currently my plan for that one, for Nvidia. So yes, this is the 4-hour time frame. If you start dipping into the lower time frames like you did earlier, basically with the trade that you had, I think you got in somewhere down here and then you exited somewhere here, and it's like that all works, but understand with, which is perfectly fine actually to learn on, like don't expect um, to see a whole lot of like gains. This was a 42-cent gain. Like that's great. That's a 2% gain on a trade. Um, that's great. Now we just got to work on your management because you really didn't have anything. You were testing it out. Well, we got to work on that. It's got to make sense on the chart on why you're getting in, where you'd actually get out, and for what reason. Like the price action has to tell you when's a good time to get out. Technical analysis helps with that, but that's something that you got to get into. So yes, I think that's all you said. What did you say? Last steep drop was matched with a large sell-off. So far, there hasn't been a lot of movement in regards to the overall volume. See what happens in the next 2 or 3 candles. Feedback. Yes. At the 15-minute view, it's straight sideways in regards to both change and volume. When did you say the market closed? The market closed at 4. And so Nvidia is closed. Yep. Post-market. Yeah, so Nvidia should be closed right now. Just hovering here. And you said the 15 minutes going sideways? I don't see that. So you might need to turn your phone sideways. That way you get a little bit more chart candles. You're on the 15 minutes for NVIDIA. Here's the 5-minute for NVIDIA. Making sure my feed is right. I'm on NASDAQ. Where are you at? NVIDIA Corporation. We should be the same thing. Mine's NASDAQ. Should be the same thing. Closed at 532.10. 532. Actually, it is still moving. No, yep, price is still moving. Okay. So this is just aftermarkets. Yes, in which case things tend to go sideways because a lot of your key players aren't trading right now. And so they're not going to be messing with anything. Their long-term stuff might be, or their overnight stuff is probably just sitting there and just doing whatever it's going to do. But for the most part, nobody's touching it. 5 minutes still in an uptrend, just a very subtle one. Yeah, I'm not seeing that. I do not see what you see. I really do not see what you see as far 5-minute Nvidia. Love you too. Yeah, I don't see what you see. There was an uptrend. Um, like, yeah, you're right. I mean, and this is, I mean, uptrends is however you want to figure it out. But eventually, at some point in time, you look at it and go, okay, yeah, it was strong in an uptrend, but now it's no longer. Is it in a full downtrend yet? No, I wouldn't say it is. Only because we don't have any, I don't have any real structure to work with. And when I talk about structure, I'm talking about those pushes, pullbacks, pushes, however big or small. In my eyes, I have an idea. I wouldn't use this as a trading opportunity, but I would still consider this an uptrend. So not every uptrend gives you an opportunity to get into the market. Not every downtrend gives you an opportunity. Like there's a whole lot of stuff that happens that you just can't you can't reasonably get into something on a short term down here. And so like this for me, it's pushed down. You had a small little pop up here, and then it's just funneled off. But like that's not good structure to me. I want to see I want to see stuff that is, like clear. This had multiple, you know, touches here before it finally broke through and went up. Now, how far you want to include this as your zone, who knows? That wouldn't have been a price level for me to get in and everything like that. But you can't look at it going, oh, yeah, I should have gotten in. No, I know exactly where I would get in to particular things without hesitation. Um, just because of the way that I've watched this over and over again. Like on the 4-hour time frame, this zone would have been nice because it was nice and clear, especially clear in the line chart. Um, you had a zone that was nicely respected, and then price came down here and paused for a little bit. You got rejection, small candle, big candle, and it's like, okay, cool. In comparison to all this stuff, this start is starting to show me buyers are in the market at this level. For whatever reason, who cares? I don't care either. I just want to be whoever else is also winning in this market. I want to be on their side. And so that would have been a perfect entry for me. Once again, I would have already targeted previous highs, not necessarily a higher high, because I'm not even sure where Nvidia is going to go. Especially since we've been hammering into this level repeatedly. Sometimes you end up getting a rollover. Sometimes you get a breakthrough. You just never can tell. And so I would go for what I believe would be a reasonable target. And given that scenario that I said earlier in regards to there's my level, I'd mark that out a little bit more because price came a little bit further down. It's like I'd have a stop down here. I'd take my entry here, and my target would be the high of this area here. And so, when you look at what I'm going for, it's over a 1-to-1. So it's going to cover my previous loss if I had one. It's going to put me up ahead if I haven't had one. It's going to cap me out if I've already had 2 wins in a row. Like this is it. It's just a matter of taking trades that make sense, that you're gonna get more when you win than when you lose, and you just do that repeatedly over and over again. And so that would have made complete and total sense to me, and I would have taken that trade. So this is what you got to look at. Now, you need to stick with one time frame. I know you talk about going down to the 5-minute, the 15-minute, and everything like that. And the 5-minute and 15-minute works only if you're going to set aside an hour or so to be able to trade that particular time frame. To be able to look at the 5-minute time frame, go away from the chart, and not be able to come back to the 5-minute time frame until like 2 or 3 hours, the whole momentum, the whole sentiment of the market has changed by that point in time, more than likely. And so that does you no good. If you're going to be able to check the markets every hour, well, then the hourly time frame is perfect. Because then every hour you get a new candle, you can see everything that's going to happen, or everything that should be happening, and you can start planning accordingly. If you're going to check it every 4 hours, then this is where I'm asking you, like, what can you dedicate to go, yeah, I can absolutely check it, look at what's going on, make a plan, and then 4 hours later come back and see if things are starting to line up for that plan. If they are, then you basically, in essence, take the trade. If you're going to be trading Nvidia, then you would place the trade in Nvidia. But if you can't do that every 4 hours, or if you're looking at the 5-minute chart, but you can only look at every 5 hours or every 4 hours, that 5-minute stance is going to demolish you. 5 minutes, the 5-minute chart at 9 this morning, 9:30, because that's when the market opened up, was here-ish. If you came back 4 hours later at 1 o'clock, that's all happened. So, I mean, unless you're taking in the higher picture going, okay, yeah, this is an uptrend, I'm going to take a buy, and then come back at 4 hours later to see if which perfectly viable too. That's fine too. I think it's harder to make sense of, no, maybe not. That might not be bad. I need to know what your timetable is, because that'll tell you what time frames you should be looking at. There are so many time frames to look at, but if you look at them all, you'll get conflicting information. And so you can't look at them all. You need to look at a couple particular ones, and then that's it. Because it doesn't matter what's going on the weekly, daily time frame. If this previous candle was the day and you saw that, and it's like, okay, well, we just broke out, I'm going to expect price to go ahead and start pulling back to this area here. Well, if that's the case, you never would have taken a buy on the 5-minute time frame if you started with the daily, because the daily says it's already broken through. It already broke through strong. You should see some sort of retracement reaction, things like that. Here's another, well, that's a strong bearish. Here's a strong, there's a strong, bullish candle followed by a strong bearish candle. Granted, there's a gap there, but that's probably a Monday, Tuesday. Yep. So that's a market open close gap. But it's like you probably wouldn't have done that. You wouldn't have taken a buy given that information. And so this is where it's like you have to be careful on what timeframes you're looking at. So yeah, let me get back to you on that. Stop recording.